Hello everyone, welcome back to my YouTube channel. So I got a recent comment from somebody that this is a very low effort content and there is no added value. So today again I'm going to make some low effort content with no value added to all of you. That is the perspective of somebody. Okay, let it be. Now let's come back to the point. The point today is going to be how basically bank approve the credit card or how bank basically approve the loan which you are applying. So this is the first step. Whenever a customer is going in the bank, they are applying for a credit card, they are applying for a loan. So there is a process behind that. So today I'm going to talk about that process. This is a very much asked interview question for up to intermediate levels. Okay, now let's go back to the topic without wasting any time, right? So the first thing is when you go to the bank always have a process, and in that process multiple steps are involved. So number one step is something when you get involved with the bank, you fill the form, and what you give your loan application. That is a step number one, right? You fill the form, you go to the bank, you give your details either for loan or credit card because the steps are same. Now this is your first step, initial step. After this, what bank do, that is something you need to understand as a data analyst or as a data scientist. Now first step which bank do is obviously the repayment obligations checking, like repayment obligation on the past loans. That is something bank check. Repayment behavior of the customer, repayment behavior of customer on past loans. Why? Because this tells us as a bank that this customer have a tendency of paying the loan on time or either defaulting on time. So that is something we check. Not only on the past loans, we check also if there are any lending firms, they have borrowed some money, they have paid that or not. So we can mention, we will also check as an analyst lending firm history of this particular customer, because they can take loan from some any other, not directly from bank, from NBFC or small finance, those companies, right? Now this is step number one. Now in this there are some sub steps for this. So the first step is we check the existing mortgage payment history. Now this gives us a kind of a understanding that how's the history of the person in terms of repayment. Now second step here is credit card history. We check credit card history. This we are considering that person would be having history with any other bank also and in our bank also. That is a possibility because the customer are divided into two parts, NTB and ETB. NTB is new to bank customer, which are totally new to our bank. Existing to bank customer, which is ETB, that means that customer have some relationship with the bank. Either they have a savings account or a credit card already from us. Okay, now come back to the point. So first we did is prepayment behavior checking of the customer on the past loan and the lending firms if he have taken something. Then existing mortgage payment, then we check the credit card history. Now the next thing which we check is any personal loan of the customer which is going on or not. We will check if the customer has taken any personal loan from any of the banking or there in market or any NBFCs. Next thing which we check is demographic information. Now this is sometimes very tricky because we have this thought that what is the meaning of demographic info and why bank need to check the demographic information. So the reason for that is because bank have a kind of a tier system for every city, every country. Let's say if you are a customer in Australia, let's say you are a customer in India, let's say you are a customer in Egypt. Now there are three countries, every country have their own risk ratings. Now bank will prefer a person who's there in Australia more, because the currency is more stable, the demographic is much more stable overall. Then second number, India, then Egypt, because Egypt have kind of a geography where there are more chances of any future demographical conflict compared to Australia and India. Now that's why bank check this demographic information. So these are the steps which are getting performed in your bank. This is something you will never get to know that bank is doing all this. Now, after checking all this, there are some basic checks which bank will be doing in form of calculations. So bank will check total debt coverage ratio. Now, what is this? You can see there are two things. One is debt, one is ratio. How much debt you own, that means how much debt you have versus what is your income. So bank calculate this TDCR And on the basis of TDCR, there will be a decision that what is the decision, whether we'll pass the loan, will not give the loan, will give the credit card, or we will not give the credit card. Now, there are some things you can think that how bank will get to know about credit history. This can be coming to your mind, right? How we will get to know the credit history of the person. For that, bank will get in touch with bureau, which are data bureau like Equifax, Experian. All of them sell the data. They will give the historical data of the customer to the bank, and bank will need to pay for the each variable which the bureau is giving for that particular customer. That is a business model here. Now, current level of debt is something which is checked by the bureau data, and also check the repayment history. So all those variable usually dive into our model from the bureau data. So that's how a complete application automated system work in the backend when a bank is approving your loan or your credit card. So this is something you can answer with all these steps. This will give a structured way, will give a structured approach that you know how the business is functioning at the back end. If you like this video, please subscribe to my channel and make sure you hit the like button and put the comment if you have any doubt. Thank you so much. All the best.